Right now, there is over $21 trillion sitting in American bank accounts alone. But here's the strange part. Most of that money was never printed, never minted, never physically created by any government. It was created by banks, out of nothing. And by the end of this video, you will never look at your bank account the same way again. Most people think banks work like this. You deposit $1,000. The bank keeps it safe in a vault. When someone needs a loan, the bank hands them your money. You earn a little interest, they pay it back. Simple. That is a nice story. It is also completely wrong. Here is what actually happens. You deposit $1,000. The bank is only required to keep a fraction of that, let us say 10%, so $100. The other $900, they loan it out immediately. That $900 lands in someone else's bank account. That bank keeps $90 and loans out $810. That $810 gets deposited again, and the cycle repeats. Your original $1,000 has just created over $9,000 in the economy, money that did not exist before you walked into that bank. This is called fractional reserve banking, and every bank on earth operates this way. Now, here is where most people's minds break a little. When you walk into a bank and take out a $200,000 mortgage, the bank does not go into a vault and count out $200,000. A banker opens a computer, types a number, and your account shows $200,000. That is it. That money did not exist 1 second before that keystroke. The bank created it, instantly, from nothing, and now you owe it back, with interest, for 30 years. Here is where it gets uncomfortable. The bank created $200,000 and gave it to you. But over 30 years, you will pay back $320,000. That is $120,000 more than the bank ever created. So where does that extra money come from? It has to come from somewhere. Someone else has to borrow it into existence, which means the system constantly needs new debt just to function. Without people taking new loans, the money to pay back old ones simply does not exist. The system does not just allow debt, it requires it. So who decides how much money gets created? That is the job of the central bank. In America, that is the Federal Reserve. In most countries, there is an equivalent. The central bank sets the interest rate. Think of it as a dial. Turn the dial up, borrowing becomes expensive. People take fewer loans, less money gets created. The economy slows down, unemployment rises. Turn the dial down, borrowing is cheap. Loans flood the system. Money multiplies fast. Spending goes up, but so do prices. Every recession you have lived through, every housing crash, every period of runaway inflation, it all traces back to this dial being turned too far in one direction. So what do you do with this? The system is not going anywhere. Banks will keep creating money. Governments will keep borrowing. The cycle will continue. But now you see it. When you take out a loan, you are not borrowing someone else's savings. You are participating in the creation of brand new money and handing the bank interest on something that never existed. When prices rise and nobody seems to know why, it is often because too much new money entered the system too fast. When the economy crashes, it is often because that money creation suddenly stopped. This one system sits underneath almost every financial headline you will ever read. And once you see it, you cannot unsee it. That is what we do here. We show you the systems running your world. This is See the System.